What is DeFi? DeFi is a topic that has been going around for quite some time now. However, people have only heard of the term, but they don't really know what it is. So what exactly is decentralized finance, or DeFi for short? And is it the future of finance that will replace our current banking system? Well, make sure to watch this video until the end because we will explain DeFi to you in a way that even your 10-year-old kid can understand what it is and how it works. Welcome to Crypto Sharks, the #1 channel for all things crypto. We use stories and analogies to help you simply understand complex topics. Please make sure to leave a like and subscribe so that we can keep helping you learn and make money. You may have heard of Bitcoin, which is a form of money that is not controlled by any bank or government. Bitcoin can easily be transferred from one person to another worldwide without the need of a bank. This means that Bitcoin is a decentralized money. If you're still new to crypto and you are not sure what Bitcoin really is, check out our video on what is Bitcoin. A financial system is made up of some blocks, transferring money being one of them. But apart from sending money, there are other services that we require today. These include loans, saving plans, insurance, and stock markets. All these services include money, and they all come together to form a financial system. In today's world, all financial systems such as banks, stock markets, insurance companies, and any other financial institutions are centralized, meaning that they all have someone in charge. This means that they are controlled by either a person or a company. This centralized finance system, or CeFi, is prone to some risks such as mismanagement, fraud, and corruption, among so much more. However, in the same way that Bitcoin is decentralized, what if a decentralized financial system existed? And that's where DeFi comes in. DeFi simply refers to financial services that are not controlled by any central authority. Thanks to decentralized money, like some cryptocurrencies, we can build exchanges, lending services, insurance companies, and other organizations that would not require anyone to control them. This is made possible by the fact that you can program the decentralized money to automate some activities. But what does this really mean? The first thing that you would require when creating a DeFi system is an infrastructure where you can program and run decentralized services. That's the work of Ethereum. Ethereum can be thought of as a do-it-yourself platform where you can write decentralized programs. These programs are known as decentralized apps or dApps. We will not get too much into Ethereum right now. However, we can tell you that Ethereum has made it possible to write automated code, which is also known as smart contracts. These smart contracts can manage any financial service that we would like to create in a decentralized manner. So you have the power to define the rules for how a service will work. Once these rules are on the Ethereum network, you no longer have control over them. They immediately become immutable. With a system like Ethereum, which can create decentralized apps, we can bring our ideas for a DeFi system to life. So now that we can tell what a DeFi is, what are the building blocks to bring it to life? Of course, a financial system would not be complete without money. But why not use Bitcoin or Ether? Bitcoin is definitely decentralized, but it has very basic programmability. Not only that, but it is also incompatible with the Ethereum platform. On the other hand, Ether, Ethereum's currency, is highly compatible and programmable but highly volatile. To build a reliable financial service, you need to use a stable currency to operate in the system, and that is where stablecoins come in. A stablecoin is a cryptocurrency pegged to the value of a real-world asset, primarily a major currency like the US dollar. When creating a DeFi system, you need to use a stablecoin that does not use fiat money reserves to maintain a peg. This is because it would need a centralized authority for this, which is what we're trying to get rid of. DAI would be the best for this because it is a decentralized cryptocurrency that is pegged against the value of the US dollar. That means that one DAI is the same as $1. DAI is also backed by crypto collateral, which can all be viewed publicly on the Ethereum blockchain. In fact, it's overly collateralized. This simply means that if you were to deposit $1 worth of Ether into a lockup, you would be able to borrow 66 cents worth of DAI, and when you want to get your Ether back, all you have to do is pay back the borrowed DAI, and your Ether will be released. Alternatively, you can just buy DAI on an exchange if you have no Ether to deposit as collateral. Since DAI is over-collateralized, no matter how much Ether's price becomes volatile, the value of the Ether that is locked up would still remain at 100% or even more. If you think about it, the DAI stablecoin is some sort of smart contract that resides on the Ethereum platform. Because of this, DAI is completely trustless and is a truly decentralized stablecoin. This means that shutting it down or censoring it is impossible, making it the best choice for a decentralized financial system service. Now that we've found a stable decentralized money system, the next thing is some additional services. The first service is a decentralized exchange or a DEX. DEXs mostly have a set of rules or smart contracts that allow users to buy, sell, or even trade cryptocurrencies. Just like DAI, you can find them on the Ethereum platform. There's no need for an exchange operator, sign-ups, identity verification, or even withdrawal fees to trade on a DEX. Enforcing the rules, executing the trades, and securely handling funds are all done by smart contracts. In addition, you rarely need to deposit funds into the exchange account in order to conduct a trade. This gets rid of the risk of exchange hacking, which is quite common in centralized exchanges. However, the range of decentralized financial services does not end there. Another service is decentralized money markets. This is a service that connects the borrowers and the lenders. A great example of an Ethereum-based borrowing and lending dApp is Compound. It gives you the power to lend your crypto and earn some interest from it. Let's say, for example, you want to pay your bills, but all your funds are in the form of cryptocurrencies. You can simply deposit some of your crypto as collateral and borrow against it. Lenders and borrowers are instantly connected on the Compound platform. The platform also enforces the term of the loan and distributes the interest. The whole process of earning interest on cryptocurrencies has become quite popular, and it has led to yield farming. Yield farming is a term that refers to the effort of putting crypto assets to work as you seek to generate as many returns as possible. So now we have decentralized stablecoins, decentralized exchanges, and decentralized money markets. But what about decentralized insurance? It goes without saying that all these financial products have some risk, but more on that later. Since we can create other services, why not create one that insures your funds in the event that they are lost or hacked? We can create a decentralized platform that connects people who are willing to insure their funds for a premium. Everything would work just like an insurance company, minus the company and agents in the middle. DeFi services work hand in hand, making it possible to combine different services to create a new, exciting opportunity. Think of it like Lego blocks. You can get creative and build anything with them. In fact, DeFi services have been dubbed money Legos. For example of what you can build with these money Legos is as follows. You can use a decentralized exchange aggregator to find the exchange with the best rate that you will use to swap Ether for DAI. Next, select your preferred DEX and proceed with the trade. After that, you can lend the DAI that you've received to borrowers and earn interest from it. Lastly, add insurance to the whole process to ensure that you are covered if anything goes wrong. This is just an example of how you can join the DeFi services to form a complete system. Now that you know what DeFi has to offer, imagine all the advantages that come with it. You get transparency, interoperability, decentralization, free-for-all services, and even a flexible user experience. But no system is without risk. The greatest risk right now with DeFi is that it is still in development. This means that anything can go wrong at any time. There have been instances where smart contracts did not correctly define some of the rules for certain services. This gave the hackers loopholes, and they got creative with them. So to avoid going for a great loss, make sure that you're trying out an existing DeFi service. Do so with an amount that you're comfortable losing. You should remember that a system is decentralized only as far as its most central component is. This means that some of the services may still have some centralized aspects, making them partially decentralized. To be on the safe side, make sure you understand how the product or service works before you decide to invest in it. This will make you aware of any issues that may come up. Basically, the DeFi revolution is here and it's still in its early adopter stage. Over the years, you'll see if it has managed to become a mainstream adoption. It is without a doubt that decentralized financial system can be of great benefit to a large number of people, especially those that suffer from financial discrimination, high fees, and inefficiencies in managing their funds. To sum it up, DeFi is basically a term given to a variety of decentralized financial services whose main aim is to replace the current centralized financial systems. If you have any questions, just write them down in the comments section below and we will answer you. Also, before you go, just hit the like button and subscribe to our channel for more amazing crypto videos. This has been the Crypto Sharks. Thank you so much for watching.